Welcome back to Making Money Matter, ladies and gentlemen. I've got something interesting today. Now, some of you have reached out to me and said, lithium's dead. Well, I don't think so. And as you know, I was just recently at Rick Rule's conference in Florida, where we talked about being a little bit of a contrarian, because that's where the opportunities lie. So I've known, this is Tim Goldsmith. Tim is a strategic advisor and non-executive director of Pantera Minerals. The ASX code is PFE. Pantera have got, wait for it, lithium. Yep, ring the bell. DLE, Direct Lithium Extraction. It's really interesting. It's in Arkansas in the US. The reason I wanted to talk to Tim is I think this is quite a strategic play. By the way, none of this is financial advice. Do your own homework or give Tim a call. But I wanted to talk to you, Tim, because I want to find out, first of all, what drew you to the company, because you and I have known each other for a while, over 20 years with PwC. And here you are as a strategic advisor for this company. So first of all, welcome to Making Money Matter. And secondly,
thank you.
What drew you to Pantera? You're a strategic advisor and a non-exec director. What's with the company? What's going on?
Well, thanks, Kerry, for the introduction. And you did say that if anyone wants to know more after this conversation to give me a call, please do. We knew each other and obviously worked together over many years, Kerry, and it was when I was at PwC, which I left now over 7 years. Frightening how quickly time passes. Yeah, so 2017, June 2017. After that, I became CEO of a private equity-backed company called Rincon, which it wasn't called Rincon at the time. It actually had a bit of a corporate mess, which needed a bit of time to work through. And I had a number of assets. And ultimately, the flagship asset was a huge lithium brine asset in Argentina called Rincon. And we had to go on a journey to work through a whole bunch of things. But in reality, the main game was this lithium asset. We were very early at direct lithium extraction. In fact, well before I started at Rincon, they were focused on direct lithium extraction. About 2011, I think it was when they first started, really out of necessity because of the type of asset which Rincon was. And through the journey I was there on, we had to reinvent the process, build pilot plants, etc., get resources upgraded, all of those things. And ultimately, we were able to sell the asset in totality to Rio Tinto in sort of April, May 2022. So we sold it for just over $1 billion Australian dollars, so 825 million US dollars.
Wow.
And I guess through that, I got a lot of experience on lithium brines in particular and the lithium industry in particular. And from that, I was then actually contacted about a whole bunch of other lithium assets, which I contemplated and thought about. And then when this Pantera one came up, it was actually a very interesting opportunity that I thought I would get engaged and involved with. And it really is fascinating. There's some way for it still to go, but it's a very interesting opportunity, which I think is totally not understood in this Australian market at all. And rightly so, yes, outside of Pantera, there is no direct entry into this in Australia. And really in Pantera, we've only held this asset in the company for the last 6 months. And we've had a very clear focus in that 6 months on increasing our leases rather than actually on marketing the company. So it's not a story which is well known. So today is a great opportunity, I think, to help your viewers understand the story, Kerry.
Well, we'll get on to that in a minute, but Tim, if I can just be blunt with you and say, you know, you sold the other, by the way, congratulations, selling it to Rio Tinto 2022. Things have slightly changed since then. And to be frank, lithium is currently on the nose. So a bit of a big call. I'd love your view on, because as you said a moment ago, you have got a lot of experience in this area. What do you say to those people out there that are saying the lithium party's over and it's not coming back?
Yeah, well, I guess you buy straw hats in winter, not in summer.
True.
And I think the sort of the noise which you're hearing today in the market is not too dissimilar to what we heard in 2019, when again we'd had the first run up, or certainly in my time in the lithium industry, I guess we've had two booms and two busts.
Mm-hmm.
And we'd had the first boom, and we were in the lithium winter of 2018, 2019, 2020, whenever the exact years were. And again, you were faced with all of those same comments. I think if you step back and say, is the energy transition going to occur? Is decarbonization required? And if so, are batteries going to be a key part of it? I don't think there's many people who would argue that batteries aren't going to be a key part of it. And when you look at batteries, there's the lithium ion battery. Lithium is in all of them. It's the one thing which is, and nobody's yet found a battery anything like as good as the lithium ion battery. So whilst there's been lots of people trying, this still seems to be a staple for whatever the battery is going to be. So I think the future demand for lithium is going to be huge. It's such a young and immature market, though, that you're going to see severe swings up and severe swings down for some period of time. You're going from a market which was really 100,000 tons a year. I think now it's 1 million tons a year in only a pretty short period of time, climbing to 3 million tons a year, pretty short period of time as well. So the increasing size of the market is huge. Demand is still very strong and growing, but then you've got supply which comes on in bits and bobs, and you've got China controlling the market. So there's a lot of oddities going on in there, but I do believe that there's going to be a very real long-term huge demand for lithium, and those who can come up with projects which will be at the lower end of the cost curve will do exceptionally well. And now is the time to be hunting out those bargains when nobody wants to engage with the market. So I think if you do look back at 2021, when the market did go ballistic, which was obviously close to when we sold Rincon, those who invested before the market started moving were the ones who made the most money. And I think that's the opportunity here.
Yeah,
But
good
I don't
point.
know when the market will change. Is it tomorrow? Is it 6 months? Is it a year? Is it 2 years? I don't know. I didn't know that in 2019 either. This is the time when you need to be doing really good work, so you're positioned that when the markets do present themselves, you are able to quickly go after them.
That was a great summary. And one of the things I want to point out to our beautiful audience out there is the positives with DLE, direct lithium extraction. By the way, been around for decades, been used by other people. It's just, it hasn't been used in the lithium industry, but it is now proven as a technology. It is cheaper, it is higher quality, and it's also environmentally friendly. So it kind of ticks all the boxes. So Tim, your project, which is in Arkansas, and I got to say this name, I love it. It's the Smackover project. It's the Smackover area. Tell us about why, because somebody, and I think it was in one of your presentations, but also I think that the senator or whoever of Arkansas recently said, this is the new lithium superhighway. And I was like, that's a big call. So it was an oil and gas field, and now you've got big guys coming in and saying this is a big lithium field. Explain that to us.
Yeah, so there's I guess a number of comments. And I will come back on the DLE, I'm sure, later in the conversation, because again, I've dealt with it for a number of years. It's not proven in lots of different mines at this moment in time, but it's very, very close. And those who have worked closely with it do understand that this thing does definitely work. It's just a case of really, I think what's been lacking with it actually in the past has been people with deep enough pockets to make sure that this thing really does work. And now you do have Rio Tinto with Rincon, and you have ExxonMobil and the Smackover and other people. You're going to, I think, overcome that. But so let me talk about the Smackover. So in fact, let me step back a bit further than that if I can. When we reflect on the lithium industry and what we've learned to date, there's a few key findings which I think are very important to understand.
Okay. Yep.
The first is that lithium comes in two very different forms, in the brines or in the hard rock. Mm-hmm. And I think that's one of the challenges of, say, a country like Australia, which is very much a mining country and very much understands how the hard rock mines, what they mean when you get drilling results, or they can understand where they are, understand what Australia is, etc., etc. Whereas the brines are far more akin to an oil and gas business. If I think of Rincon, we were never going to have a mining truck there. We were going to put a well in, and we were going to suck out brine and then put it into a refinery, if you want to call it that, which is DLE. and process it into lithium, which is not much different than what oil and gas industry has done for hundreds of years. So actually in Argentina, which is where Rincon was based, each of the three major oil and gas companies within Argentina were each talking to us quite ahead of the game of when we actually did finally sell. Now, there's many good reasons why they didn't progress, etc. But the oil and gas companies have long seen this as more akin to what they do rather than what mining people do.
100%.
That's the brine side, not the hard rock side. So that's, I think, important to state. The other piece which is important to state is when you look at the cost curve, the lithium brines are at the cheaper end of the cost curve.
Yep.
Now, they can be a bit expensive on the capex in some instances, but not always. But certainly their operating costs are at the lower end. So that's useful to know. But they are also damn difficult to make work. They aren't a switch on and easily work first time, whereas the spodumene and the hard rock mines in particular have been much easier to get permitted, get built, and get operating, albeit that they, I guess, have a concentrate which is nothing like the same level of closeness to the final product that the brines do come up with. And obviously the concentrate then gets shipped off to China, which is then converted into the end product. So what we've seen here is that whilst the reserves historically have been much bigger in the brines than they have in hard rock, it was the hard rock which was able to expand and bring the new supply to market much, much quicker. But it's going to be at a higher cost. So there's a key question here around, in the future, if we do see that as soon as we get higher lithium prices, there's an encouragement for hard rocks to come to market pretty quickly and make sure that the prices don't run away, perhaps as they have in the past. They will be higher cost than good brines. So the question to always ask yourself is, when a brine asset is shown to you, can this be a good brine, and can it therefore be cheaper than what you'd see in the hard rocks? So now let's swing over to...
Can I just ask you one question before you swing over to that?
Yes.
One of the comments that you just made was that there's potentially a higher capex at the front end. So does that kind of then create a more even playing field between the hard rock and the brine? Do you understand what I'm saying? Because
sure,
hard rock doesn't have that big upfront cost, but brines do. So doesn't it play out in the wash?
To some, well, I say that's part of why the hard rocks were the ones which did come to market. I guess there's the other piece, though, is that the brines end up with a, let's say, 99.5% product, whereas the hard rocks end up with a concentrate, which probably has about 20% product in it. And then you'd send it off to China. Right. So the capex is in China on those converters. So you've seen when we've tried to do those converters in Western Australia, that they've ended up costing quite a significant amount of money and are yet to operate effectively because a lot of the IP does reside in China. So yes, it's clearly swings and roundabouts. And part of the challenge for a company like Pantera is, how do we make sure we don't have such a high capex bill ahead of us that is impossible for us to ever raise our money? And we think we can overcome that by building in modular plants, which are smaller than the big bang, which you probably have to do in the lithium triangle because the place is so remote, and has so many other challenges to it that if you're modular, it'll take a long, long time in a place like the lithium triangle to get to a size of any significance. Whereas when we look at the Smackover, we think that's not the case. So let me go to it. So brines in the lithium triangle, with the exception of a few very high grade salars, most of them average about 300 to 400 parts per million. When we look at the Smackover is an oil field brine. Now, what that means is this is all part of the oil field formation. And historically, oil fields have, as they've sort of sucked up the oil, there's also been brine associated with it. Now, they try to suck up the areas with the least amount of brine and the most amount of oil, but then they separate and send the brine straight back down. That brine has always been known to have some degree of lithium associated with it. And why the Smackover? The reason is the lithium grade within the Smackover formation is substantially higher than any of the other oil field brines that I'm aware of. And when I say substantially higher, we're talking three similar sort of grades as what I mentioned, the lithium triangle outside of those big lithium triangle mines. So 200, 300, 400 parts per million within the Smackover region. Now, what I might do is just share my screen and explain where the Smackover is.
That'd be good.
Because I think that it's
a great
probably...
name, isn't it, ladies and gentlemen? The Smackover project. You can't forget that name.
No, there's actually a town called Smackover, which is past
there?
its best. Yeah, it's past its best. It's fair to say. It's in Arkansas. I shouldn't say that because there's lots of people who live there. Not lots of people. There are people who live there who would say that it's still a great town. But the oil industry has sort of been and gone. So it hasn't quite got the influx of money coming into it. In fact, you could say that about a lot of the Arkansas area where this formation resides, which does sort of mean that there's a great desire of the community to actually assist us and others in helping a new industry emerge. So just on this slide, the Smackover formation is this huge formation. It's 600 miles long and 60 miles wide in places. It starts, you can't quite see the far right piece there, but it basically starts in Florida, I think it is, and goes all the way through to Texas. Now, the depth of it varies and is pretty damn deep in the far right piece, which is why there's been no great focus in the Mississippi, Alabama, and down there. And then it gets to, it's still deep in Arkansas and Texas, but it's about 10,000 feet, which is about 3 kilometers. So relatively deep. Now, it's fairly well known that the lithium grades get stronger as you go from east to west. So therefore, the furthest west is Texas and Arkansas, and that's been where the belief is that the grades will be best. The situation of landholding in Texas is not without challenges. So whilst there are people focused on that Texas piece, it hasn't quite caught the imagination of Arkansas. And this all goes around the issue of who owns the brine rights. And in Texas, that isn't clear. Whereas in Arkansas, it's extremely clear because Arkansas for 50 years has been extracting bromine out of brines. In fact, Albemarle have been extracting bromine out of brines in Arkansas. So there's a whole slither of legislation which assists in understanding who owns those brine rights. And obviously the brine is where the lithium resides. So that is what we were able to then target. So let me go to a Arkansas only map. So I guess what I try to do there is explain the Smackover formation. Sorry, Kerry?
Can we just have what I'm looking at here as well? And I think it is important that there's little ASX company there. It's called Pantera Minerals, the ASX code PFE, but you are surrounded by what looks like oil and gas companies that seem to me like so my question to you is, those companies that are in there at the moment, are they drilling for oil and gas or are they focused on lithium? Because I know you are, but what about these guys?
Well, can I maybe ask you to hold that question? And if I don't answer it here, then please ask again.
Okay.
So this is now a blown up piece of just Arkansas. And again, it's those same names which you referred to and mentioned. So let me sort of explain how they came to be and why we've come to be. So, and the big gorilla here is ExxonMobil. ExxonMobil acquired what is the red hatched area there. They acquired that last year from a company called Galvanic, and they acquired that purely for its lithium potential. So they've been very clear that this is purely looking at lithium. The exact amount that they paid for that investment has never been publicly stated. Wow. The Wall Street Journal stated over 100 million. We do know from a couple of other perspectives that the price which was paid was significantly more than that. One was a company which we have some degree of association with, who was actually in the bidding themselves, and they bid over 200 million for that and weren't successful. And in fact, last week, myself and the chairman, Barnaby Edgerton Warburton, were in the US, and we met with a number of large oil and gas companies, I guess, and other companies. And one of those also did advise that they were bidding, and they were over 200 million with their bidding as well. So a very substantial cost by Exxon to come in for lithium only. Oh, my apologies. I think that's the dog's just barking. Kerry, I hope that doesn't
I
too
can't hear,
loudly.
can we hear it, ladies and gentlemen? No, we can't. The toys.
So what Exxon have done since then is they continue to lease areas. So they have leased now, it doesn't show on this map, but they've basically leased to the north of us, under where the word Standard Lithium is. They've leased that little way and also come down the west of our exclusive area as well. So they continue to lease. Now, there's always a whole degree of scuttlebutt around these things, but the cost of what we understand they're leasing for is 3 to 4 times what we are leasing for in what we call our exclusive abstract area. In fact, it is what is called the exclusive abstract area, which I'll come on explain in a second. So Exxon remain extremely active in the region. They recently drilled a fresh well, right next to our landholding, sort of almost on the border, just to the east of our block there. So around there, if you can see my cursor.
Yep.
And they are certainly very publicly stating that they're going to be putting significant investment into this area and intending to be operating within a few years and generating enough lithium for, I think, 1 million cars is what they've said. So Pantera, so after that, we were, the sister company was unable to acquire that land which ExxonMobil acquired. We looked at other opportunities in how to enter this area, and some other guys, some leasing guys, came to us and we spoke, and we ultimately ended up going through a process. We paid some funds up front to get an exclusive abstract area. Now, I won't go into the full details of it, but claiming land is complex because this is all private land. It's not like you see in Nevada or Arizona where you've got to get federal approvals. We don't need to do any of that. So there's no BLM approvals needed here. It is private land, and there's all kind of ranches and farms and stuff like that. This is real oil and gas country. So there's an awful lot of small players in there. So understanding exactly who owns those brine rights is not a straightforward or simple thing. By getting that exclusive abstract area, we basically were the only ones who were ever going to get insight into who had the ownership, and we were able to approach them and actually get deals done. So we have currently leased just over 26,000 acres. And since we listed this asset in February this year, we've really been head down, bum up, really pushing to get the leased acres. We initially wanted to get over 20,000 because our understanding was that until we had that number, it wouldn't be deemed significant by any other player within the area. So we needed to get that. We then went on and went to 26,000 acres purely because the further north part of our lease we think is particularly attractive, and we did want to get as much of that as we could. Now, it's not necessarily a cheap exercise pegging this land, and if you actually look at our market cap to date, basically we have spent all of the market cap in just leasing the areas we have.
Really?
So there's
Wow.
Yeah. And as I mentioned, Exxon are paying 3 to 4 times what they're leasing for just outside our exclusive area. So I think I mentioned to you when we last spoke that there's a number of see-through points here which would suggest that the market cap of our company is way understated. One of which is obviously what ExxonMobil paid for their land last year, which we don't know exactly, but we can guess.
Yep.
Another one is just what the price at which they're leasing would certainly suggest that we are way undervalued on what we've got. So we've got 26,000 acres. I mentioned before, Arkansas has a very clear pathway around laws on brine. So we're able to unitize, and we could probably get 30 to 40,000 acres very easily locked away into a unit to commence production if we so wished. So the focus has been purely leasing to date. We've stopped that focus now because it is an expensive game. We've got a significant enough holding, and now it will be about exploration. Just to answer your last question, Albemarle have been here for 50 odd years. They are the ones who've been mining the brine and creating bromine from it They're obviously also the largest lithium miner. They haven't been too vocal in what they are doing, but we do know they are focused on the lithium as well. And Standard Lithium is the other one, just to note there. Standard Lithium has been looking at this area for 7 years. When I started the Rincon, actually, the Standard Lithium guys were just starting up. So they've done some really good work. They've been methodical. They've got a operating pilot plant using a DLE technology supplied by Koch Industries, which is one of the biggest companies in the I think it's the biggest private company in the US. We
Wow.
actually met the guys last week, great bunch of guys. And I think that they stated that they were the biggest private company, and they're doing the DLE for Standard. And just recently, which is another one of these see-through points, Equinor, which used to be Statoil out of Norway, so it's the Norwegian state-owned enterprise. They have just penned a deal with Standard Lithium where they will acquire 40% of Standard Lithium's assets for 160 million US dollars. So again, when you look at our market cap of a measly 10 million, it shows straight away the opportunity for a revaluation for us.
Tim, you've got this exclusive abstract area. It's under leasing. We understand the Australian market and how, we've got tenements and there's certain costs around that. How does the leasing market work over there? Do you have to pay a fee every single year to keep those leases? Is that how it works?
So ultimately, you can. A lease is to be negotiated, so they don't have to be the same. But in general terms, what we've been leasing is something whereby we pay an upfront payment for a 5-year period.
Okay.
And then we have options at the end of 5 years and at the end of 10 years to go to a further 5-year period with a further payment. So there's a once-off payment on day one, if you want, which covers you for the next 5 years. And there's also a royalty should we get into production. The royalty in most of the new leases have been written to basically coincide with what the state will determine to be the lithium royalty. And there's consideration going on that at the moment. And in fact, I note Exxon, Albemarle and Standard Lithium put together a paper just last week, which was suggesting a royalty of just less than 2%, which would be pretty negligible.
Okay, so the area, and we don't have a lot of time left, but I just want to ask, that area that you have there right now, that is confirmed, leased, no one can come in. In other words, I'm looking at ExxonMobil and thinking, can they swoop in and say, get out of our way because we've just drilled this well pretty close to your boundary and we want what you've got?
No, they can't. So the leases are ours.
Okay.
They obviously can come and talk to us about that. And it's nice, a little $10 million company, to know that ExxonMobil do want to talk to us. And we've had a number of good conversations with them, including one last week. So we certainly keep in good contact with them. But it's not just ExxonMobil. All the other oil and gas companies are also looking at this and saying, this is pretty interesting. We understand how to drill wells which are 10,000 feet. It's no great challenge for us in the oil and gas industry. We can do this stuff, and it's nothing difficult for us to then refine what you bring up into end products as well. So there's an awful lot of interest from the oil and gas companies.
All right, talk to us about I'm talking to you in August of 2024. Because what our audience always looks for is, where's the value coming as you go forward? As you say, you're a teeny weeny company sitting right next to the big boys, ExxonMobil, $476 billion market cap, ladies and gentlemen. But I want to know, where's that shareholder value? What are you going to do to continue to build for shareholders going forward for the rest of this year?
Yeah, so I guess I mentioned that in fact, why don't I just skip down here? So I mentioned that we have really spent this year to date amassing the project acreage. That has now completed. Yeah, we will still opportunistically add to it, but it's not the smartest use of our funds from here. The smartest use of our funds from here is, firstly, we're doing a subsurface modeling, a 3D subsurface modeling through SLB, which used to be called Schlumberger. Have been doing that work, and they should be reporting to us before the end of this month on their findings of that. And what that is basically doing is looking at our land in a lot of detail to say, here's the areas where we think there'll be specifically better grades of lithium or more brine and all of that sort of stuff. So That should be coming later this month. And then we're going to re-enter a well. Now, again, the Smackover, because it's been an old oil and gas area, the old wells, there are just hundreds of them all around the place.
Oh.
Because oil has been mined here for 100 years. So we've identified a well, and we're in discussions with the owner of it to basically utilize someone's existing well to go in and sample our brine. And the idea would be that hopefully sort of September, maybe things always take a little bit longer than you like, early October, we'll be able to go into drill down, get into the Smackover. The existing well, which we've identified, there's a couple which we're working with, and so we're sort of waiting a little bit for the SLB subsurface modeling, albeit we're getting some early stuff now to work out which is the best well. But the idea is to use an existing well. Now, one of the existing wells we've looked at is basically down to 8,500 feet, and is currently being utilized as a disposal well by the current owner. And the idea is that we lease that well off him for a period of time, and we, instead of using it as disposal, we drill down further into the Smackover, which is another 2,000 feet further down, so another 600 meters, and then we will take samples from that, and we will use those samples to, one, be able to articulate exactly what the grade is that we have. We can guess at the moment based on a fair bit of other useful information, but we want to get the real grades, the impurities within, and then also work out what would be a flow sheet for direct lithium extraction, which can be viable for the brine which we have. So that would all happen hopefully by the end of this quarter, or at the very latest early the next quarter. And then from there, we would work out how many further wells we might need to be able to get ourselves to outline a resource. And then after that, work towards a pilot plant and a feasibility study, which is, we're probably talking here middle of next year for a feasibility study, hopefully with the pilot plant operational, to then come up with what we perceive to be a modular basis for building operational mine. Probably 5,000 lithium carbonate tons per annum, give or take, would be the target we'd be looking at, hopefully with a capex of, let's say, 100 million, which wouldn't be outrageously difficult for an organization of our size, as opposed to going for a big bang, which might be $1 billion, which would be too much of an ask. But the idea of modular is you could then very quickly build other modules next to it and get to 30, 40,000 tons of LCE probably within 5 years.
Yeah, that's what we like. It's like building the choo-choo train, ladies and gentlemen. Now, Tim, just before we finish up, I want to ask you one thing, because you talked about the re-entry well and the fact that the well's there, it was a disposable well, and that you're going to drill another 2,000. So would that be a lot cheaper? Because it sounds to me like they've already done 8,500. Is that in good nick? You don't need to do anything, so you can take the drill bit down to that sort of 8,500. Still got to get down there, but I'm assuming it would be a lot cheaper than if it wasn't there in the first place.
Absolutely. Now, whether it certainly, it's a fraction of how much it would be if you drilled a full new well. And we know the first 8,500 feet are in great shape. We do also know, so the well which we are looking at, there is a second one which we're also considering, so we don't want to sort of lock this one in too much, but the one which is our favorite at the moment has previously been down into the Smackover for oil, and they found it was a little bit too briny, which is obviously, we're after the brine, not the oil, so that's good news for us. But they closed that down about, I think, 30 or 40 years ago, and have only been operating at the 8,500 feet ever since. So it's already been down there. What condition it was left in, we don't know. So there will be a little bit of, we have to suck it and see with that piece. But we are certainly of the belief that doing that would be, I don't know, 20% of the cost of doing a brand new well, or 30%, but significantly cheaper. So it's a much, much cheaper way. And the funding which we have at the moment is sufficient, we believe, for us to do that well. Whereas it wouldn't be necessary to do a new well, because a new well, and you're going down 3 kilometers, they can be expensive, so that they will take a bit more of a challenge for us.
Very expensive. Now, Tim, I've got I said that was the last question, one last one. Do you have skin in the game? Because I always say to people, to my audience out there, it's people, projects, profit. Now, we're not at profit yet. It's early days for Pantera, but I want to know, do you have skin in the game?
Very much. So I've been, I've put over $500,000 in, which in a market cap of 10 mil is obviously a fair chunk. And yes, certainly a 5% or so shareholder. And Barnaby, who's also the executive chairman, he's similar.
Right.
So when we look at the top 20 or so shareholders, many of them are people who followed him or me in our previous expeditions and in other businesses. So they are people who we would say are relatively connected to us.
Is the strategy to do something similar to what you did with Rincon?
The strategy is to maximize shareholder value. Rincon was owned by private equity, which always meant that there needed to be an exit. There doesn't need to be an exit on this one, but we aren't going to be obstinate about this. I mean, we are sitting in an area where we're surrounded by big companies, and we're just small little Pantera. So, and it doesn't make sense to me to have 5 or 6 different mines in this area. There's a consolidation play there. So I would not be at all surprised if we don't exist as a company in, say, 3 or 4 years' time. If we were to receive a bid today even, we are going to have open ears to any thoughts and suggestions. Clearly, we don't have the financial might of an ExxonMobil, never will have. So we are very open to any thoughts they or others have. And I spent the last fortnight with Barnaby in the US, and we talked to a whole bunch of companies as well as potential investors, because I think the US investors sort of understand the oil and gas aspect of this lithium play probably better than we find here in Australia.
Yeah.
And certainly we've said to all of those people, we have very open minds to where this journey goes from here. We believe we can actually be agile and move the whole play in the Smackover at a pace which others won't. But we also do recognize that if someone wants to buy us out, as long as it is the right value for our shareholders, we're very open to that.
As he's a shareholder himself, wind it up for me, please, Tim, and let us know 3 reasons why you think people should be looking at Pantera right now as I talk to you today.
Yeah, thanks, Kerry. And again, thank you for the opportunity here. I think is totally undervalued. Now, I know we're not Robinson Crusoe in this regard in the market at the moment, but we just believe that this is an area which is going to be extremely valuable. We haven't mentioned it, but the US is very keen to make sure they've got supply chains which don't have China involved in them.
Yep.
And starting with your own product, when you look at it and say, there's as much chance that the first real lithium of any substance in America comes out of the Smackover as there is any other of their lithium projects, I think is a very good reason why the Smackover does get that support. The second is the companies who've already engaged in it and are invested are not shy of spending huge money to make this thing happen. And the third point, I think, is we are there. We probably never should have been able to muscle our way in there, but we have done. And we've got a strategic position which is of sufficient size. And we do look at it and just say that there's a real opportunity for a re-rating of our share price, both now, as soon as people start understanding the story, because we haven't told the story that well in Australia to date, but also into the future as we start doing some of the matters which I mentioned to you of re-entering the well, getting grade, and actually showing how the DLE will work.
Yeah. Well, it's been fascinating to chat to you, Tim. We've run out of time. It's great to see you. Come back and keep giving us the updates to the audience, because it's really fascinating. And ladies and gentlemen, as you saw, there is little Pantera sitting right smack against some of the biggest companies in the world in the Smackover region. Got to love that one. As I said before, Pantera, the ASX code is PFE. It's the first time Tim has been properly speaking about this to you guys. So we welcome him back in the future. But for now, Tim, great to see you. Thanks for joining me on Making Money Matter.
Thanks, Kerry.